Question 1. A policyholder, Mr. Green, submits a claim for his damaged property after a fire. His property was covered under a homeowner's insurance policy, which includes coverage for both structural damage and personal property. However, the insurance policy specifies a replacement cost for structural damage and actual cash value received for personal property loss. After investigating, the adjuster determines that the total damage to the home structure is $50,000 and the personal property loss is valued at $20,000. If Mr. Green's property is 10 years old and has experienced depreciation, how should the adjuster handle the payout for the personal property? A. The adjuster should pay $20,000 for personal property as the policy covers it at replacement cost. B. The adjuster should pay the full $20,000 for personal property without considering depreciation. C. The adjuster should pay $20,000 minus depreciation based on the actual cash value of the personal property. D. The adjuster should pay $50,000 for the structural damage and $20,000 as the replacement cost for personal property. Answer. C. The adjuster should pay $20,000 minus depreciation based on the actual cash value of the personal property. Explanation. In this case, the policy specifies actual cash value received for personal property, meaning the amount paid should reflect the property's current value after depreciation. A CV is calculated by taking the replacement cost and subtracting depreciation based on the age and condition of the items. Since the property is 10 years old, depreciation must be applied to determine the payout. This is in contrast to replacement cost, where the adjuster would cover the full cost to replace the property without considering depreciation. Question 2. Mr. Wilson files a claim for bodily injury after a car accident in which another driver was at fault. Mr. Wilson's insurance policy includes medical payments coverage, which covers medical expenses regardless of fault. The adjuster is tasked with determining the amount to be reimbursed under the medical payments coverage. Which of the following statements is correct regarding the adjuster's role? A. The adjuster should pay the medical bills in full regardless of the accident circumstances, even if Mr. Wilson has another source of medical insurance. B. The adjuster should only pay the medical bills if Mr. Wilson was not covered under any other medical insurance. C. The adjuster should coordinate with other health insurance providers to determine the appropriate reimbursement amount under the medical payments coverage. D. The adjuster should deny the claim if the at-fault driver's insurance is covering medical expenses for Mr. Wilson. Answer. C. The adjuster should coordinate with other health insurance providers to determine the appropriate reimbursement amount under the medical payments coverage. Explanation. Medical payments coverage typically covers medical expenses regardless of fault, but if the insured has other health insurance, e.g. a personal health insurance policy, the adjuster must coordinate with the other insurer to avoid overpayment. The adjuster should calculate the amount covered under the medical payments provision, subtract any amounts already paid by other health insurance providers, and only cover the difference. This process is known as coordination of benefits, and it ensures the insured is not overcompensated. Question 3, scenario-based. Mr. Taylor, a contractor, was working on a construction project when he accidentally caused damage to a neighboring property while operating heavy machinery. The neighbor submits a claim for property damage to Mr. Taylor's general liability insurer. The insurance policy includes a standard exclusion for damages caused by intentional acts. In this scenario, which of the following is the most likely action the claims adjuster should take? A. The adjuster should deny the claim outright, as damages caused by contractors are always excluded under general liability insurance. B. The adjuster should deny the claim because it was an accidental incident and the intentional act exclusion applies in any case of property damage. C. The adjuster should assess whether the damage was intentional or accidental and cover the costs if the damage was accidental. D. The adjuster should approve the claim immediately since general liability policies cover all accidental damage caused by contractors. Answer. C. The adjuster should assess whether the damage was intentional or accidental and cover the costs if the damage was accidental. Explanation. General liability insurance typically includes exclusions for intentional acts but will cover damages caused by accidents. In this scenario, since the damage occurred due to an accident, the adjuster should investigate whether the damage was accidental or intentional. If it is determined to be accidental, the claim should be covered under the liability portion of the policy. If, however, there is evidence that the damage was intentional, e.g. negligence or reckless behavior, the adjuster may apply the exclusion. Understanding the difference between intentional and accidental damage is crucial in claims handling, as this distinction determines whether the claim is payable under the policy. Question 4. Mr. Davis is involved in a car accident with another driver. Mr. Davis's auto insurance policy includes liability coverage for bodily injury and property damage. The other driver is at fault and has suffered injuries. After investigating, the adjuster determines that Mr. Davis's liability coverage is $100,000 per person for bodily injury and $50,000 for property damage. The other driver's medical expenses total $80,000 and the property damage is $30,000. What should the adjuster pay for the bodily injury and property damage claims? A. The adjuster should pay $100,000 for bodily injury and $50,000 for property damage as per the policy limits. B. The adjuster should pay $80,000 for bodily injury and $30,000 for property damage as the total damage amounts are less than the coverage limits. C. The adjuster should pay $100,000 for bodily injury and $30,000 for property damage as the policy limit for property damage is lower than the amount incurred. D. The adjuster should pay $80,000 for bodily injury and $50,000 for property damage as property damage limits are higher than bodily injury coverage. Answer. B. The adjuster should pay $80,000 for bodily injury and $30,000 for property damage as the total damage amounts are less than the coverage limits. Explanation. In this scenario, Mr. Davis's liability coverage limits for bodily injury are $100,000 and for property damage are $50,000. Since the total bodily injury claim is $80,000 and the property damage is $30,000, both claims fall within the policy limits. The adjuster will pay the exact amount of each claim as it is, within the coverage limits, which results in $80,000 for bodily injury and $30,000 for property damage. Question 5. When investigating a claim involving property damage caused by fire, which of the following is not a critical consideration for an adjuster when evaluating the claim? A. The cause of the fire and any possible exclusions under the policy related to fire damage. B. The current market value of the property damaged by the fire in comparison to the original replacement cost. C. The amount of depreciation to apply for the damaged property based on its age and condition. D. The potential negligence of the insured in maintaining the property. Answer. B. The current market value of the property damaged by the fire in comparison to the original replacement cost. Explanation. When evaluating a property damage claim involving fire, the adjuster is primarily concerned with determining the cause of the fire, assessing whether any exclusions in the policy apply, evaluating the damage to the property, and calculating depreciation for the affected property if necessary. The adjuster should focus on the replacement cost or actual cash value received depending on the policy provisions, not on the market value. Market value is not the basis for insurance payouts, as policies typically provide coverage for either replacement cost or ACV, not the market value of the damaged property. Question 6. Scenario-based. Mrs. Adams, a business owner, files a commercial property insurance claim after her store is vandalized. The policy covers property damage, but it includes an exclusion for damages caused by civil unrest or riot. The adjuster investigates the claim and finds that the damage was caused by individuals who were looting during a protest. How should the adjuster proceed with this claim? A. The adjuster should approve the claim since vandalism is covered under most commercial property policies. B. The adjuster should deny the claim based on the policy's exclusion for damage caused by civil unrest or riot. C. The adjuster should partially approve the claim covering only the damage unrelated to the civil unrest. D. The adjuster should cover the full cost of repairs as civil unrest exclusions do not apply to small business owners. Answer. B. The adjuster should deny the claim based on the policy's exclusion for damage caused by civil unrest or riot. Explanation. In this scenario, the damage was caused by individuals looting during a protest, which would fall under an exclusion for civil unrest or riot typically found in commercial property insurance policies. The insurance policies often exclude damage resulting from civil unrest, riots, or vandalism tied to such events. Since the damage occurred during a protest, it likely falls within this exclusion and the adjuster should deny the claim. Question 7. An auto insurance policy includes comprehensive coverage which covers non-collision damage such as theft, fire, and vandalism. If a policyholder's vehicle is stolen and then damaged beyond repair, which of the following is the most appropriate way for the adjuster to determine the payout under the comprehensive coverage? A. The adjuster should calculate the payout based on the replacement cost of the vehicle, as comprehensive coverage provides full replacement coverage. B. The adjuster should calculate the payout based on the actual cash value (ACV) of the vehicle, factoring in depreciation. C. The adjuster should provide a payout equal to the cost of repairing the vehicle, as comprehensive coverage does not cover theft. D. The adjuster should calculate the payout based on the market value of the vehicle at the time of the theft. Answer B. The adjuster should calculate the payout based on the actual cash value, SEV of the vehicle, factoring in depreciation. Explanation. Comprehensive coverage typically provides payment based on the actual cash value, SEV, of the vehicle at the time of the loss, which accounts for depreciation. This means the adjuster will calculate the payout based on the current value of the vehicle, taking into account how much the vehicle has depreciated due to age and condition. If the vehicle is damaged beyond repair, the payout will be the HCV, not the replacement cost, which is a common misconception. Question 8. When an insurance policy contains an endorsement for flood coverage, which of the following is the adjuster's responsibility during the claims process? A. The adjuster should automatically approve the claim for flood damage, as flood coverage is typically straightforward. B. The adjuster should evaluate whether the flood damage is covered under the endorsement and assess whether exclusions apply. C. The adjuster should decline the claim if the flood occurred outside the policy's specified geographic region. D. The adjuster should determine if the flood was caused by natural events, as only natural floods are covered under the endorsement. Answer B. The adjuster should evaluate whether a flood damage is covered under the endorsement and assess whether exclusions apply. Explanation. Flood endorsements are added to policies to cover damages caused by flooding, which is typically excluded from standard property policies. The adjuster must assess the specific terms of the endorsement to determine if the damage is covered. Common exclusions might include flood damage caused by poor maintenance or man-made events. The adjuster needs to evaluate the cause of the flood, the extent of the damage, and whether any exclusions in the endorsement apply before proceeding with the claim. Question 9. In a claims investigation, if the adjuster suspects a claim may be fraudulent, which of the following actions should the adjuster take first? A. The adjuster should deny the claim and report it immediately to the insurance department. B. The adjuster should suspend processing of the claim and investigate further by gathering additional evidence. C. The adjuster should inform the claimant that the claim is being investigated for fraud. D. The adjuster should approve the claim but reduce the payout due to suspicion of fraud. Answer B. The adjuster should suspend processing of the claim and investigate further by gathering additional evidence. Explanation. If there is a suspicion of fraud, the adjuster should take precautionary steps to gather more information before proceeding with the claim. This may involve interviewing the claimant, consulting with experts, and reviewing all available evidence. Suspected fraudulent claims must be thoroughly investigated, and the adjuster should not inform the claimant that the claim is under investigation for fraud at this stage, as it could compromise the investigation. The claim should not be approved or denied without sufficient evidence. Question 10. A homeowner's insurance policy includes a $500 deductible for all claims. After a storm, the homeowner files a claim for damage to their roof, which totals $3,000. How much will the insurance company pay after the deductible is applied? A. $3,000. B. $2,500. C. $500. D. $3,500. Answer B. $2,500. Explanation. The homeowner has a $500 deductible, which means the insurance company will subtract this amount from the total damage of $3,000. Therefore, the insurer will pay $2,500, $3,000, $500. Question 11. Which of the following is true about the purpose of an exclusion in an insurance policy? A. Exclusions add coverage for certain high-risk situations. B. Exclusions specify what is not covered by the policy. C. Exclusions increase the policyholder's premium cost. D. Exclusions are applied only when the insurance company detects fraud. Answer B. Exclusions specify what is not covered by the policy. Explanation. Exclusions are specific situations, events, or types of damage that the insurance policy does not cover. They help limit the insurer's liability by clearly defining the boundaries of coverage. Question 12. Mr. Black has a renter's insurance policy with a $25,000 personal property coverage limit. After a break-in, Mr. Black discovers that $30,000 worth of property has been stolen. Will the insurance company pay for the stolen property? A. $30,000. B. $25,000. C. $5,000. D. The insurer will pay nothing, as the policy only covers up to the stated amount. Answer B. $25,000. Explanation. The policy has a $25,000 coverage limit for personal property, which means the insurer will pay up to that amount even though the stolen property is valued at $30,000. The remaining $5,000 would not be covered. Question 13. In the context of a life insurance policy, which of the following describes the beneficiary? A. The person who pays the premiums on the policy. B. The person or entity designated to receive the death benefit upon the policyholder's death. C. The insurance company that issues the policy. D. The person who takes out the policy. Answer: B. The person or entity designated to receive the death benefit upon the policyholder's death. Explanation: the beneficiary is the individual or entity, such as a charity, designated to receive the benefits of the life insurance policy after the death of the policyholder. Question 14. Scenario-based. Mr. Collins has a commercial general liability (CGL) policy. During a customer's visit to his store, a shelf falls and injures the customer. The customer files a lawsuit and the court rules in favor of the customer, awarding $200,000 in damages. Mr. Collins' CGL policy includes a $1 million liability limit. What is the maximum amount the insurer will pay for the lawsuit? A. $200,000. B. $1 million. C. $200,000 plus any legal fees incurred by Mr. Collins. D. $1 million minus any deductible. Answer: B. $1 million. Explanation: the CGL policy has a liability limit of $1 million. The insurer will pay the maximum policy limit even though the actual damages are only $200,000. Any legal fees would typically be covered by the policy as well, but they are not explicitly mentioned in this case. Question 15. An insurance policyholder has a health insurance plan with a $500 deductible and 80/20 coinsurance after the deductible is met. The policyholder undergoes a procedure that costs $2,500. How much will the policyholder need to pay after the deductible is met? A. $500. B. $2,000. C. $500 plus 20% of $2,000. D. 20% of $2,500. Answer: C. $500 plus 20% of $2,000. Explanation: first, the policyholder pays the $500 deductible. After the deductible is met, the insurer covers 80% of the remaining cost, leaving the policyholder responsible for 20%. The remaining cost after the deductible is $2,000, $2,500. $500. Therefore, the policyholder pays $500 plus 20% of $2,000, which is $400. The total amount the policyholder needs to pay is $900. Question 16. Scenario-based. Mr. Garcia has an auto insurance policy with $100,000 liability coverage per person for bodily injury. Mr. Garcia causes an accident that injures another driver who requires medical treatment totaling $80,000. However, the at-fault driver has uninsured motorist coverage with a limit of $50,000. How much will the insurance company pay under Mr. Garcia's liability coverage? A. $80,000. B. $50,000. C. $100,000. D. $130,000. Answer: A. $80,000. Explanation: since Mr. Garcia's liability coverage limit is $100,000 per person and the total medical expenses for the other driver are $80,000, the insurance company will pay the full $80,000 under his liability coverage. The uninsured motorist coverage is not relevant here, as the other driver is covered by Mr. Garcia's liability policy. Question 17. A policyholder's homeowner insurance includes coverage for personal property but excludes coverage for high-value items like jewelry. Which of the following options can the policyholder take to ensure that their jewelry is covered? A. Purchase a separate policy for the jewelry. B. Include a rider or endorsement for the jewelry under the existing homeowner's policy. C. Increase the deductible on the homeowner's policy. D. Buy a life insurance policy to cover the jewelry. Answer: B. Include a rider or endorsement for the jewelry under the existing homeowner's policy. Explanation: a rider or endorsement is an add-on to a standard insurance policy that provides additional coverage for specific items, such as jewelry, that may not be covered under the standard terms of the policy. Question 18. A small business owner has a general liability insurance policy with a $1 million per occurrence limit and a $2 million aggregate limit. If the business faces two separate claims, one for $300,000 and another for $500,000, how much will the insurer pay in total? A. $800,000. B. $1 million. C. $1,500,000. D. $2 million. Answer: D. $2 million. Explanation: The insurer will pay a total of $800,000 for the two claims, as the per occurrence limit is sufficient to cover both. The total payout will not exceed the $2 million aggregate limit, meaning the insurer will cover the full $800,000 without exceeding the total aggregate coverage limit. Question 19, scenario based. Mr. Thompson has an auto insurance policy with a $1,000 deductible for comprehensive claims. His car is damaged in a hailstorm and the total damage amounts to $4,000. How much will Mr. Thompson have to pay out of pocket? A. $1,000. B. $4,000. C. $3,000. D. $1,000 plus any additional legal fees. Answer: C. $3,000. Explanation: Mr. Thompson will pay the $1,000 deductible and the insurance company will cover the remaining $3,000 of the damage. This means the total out-of-pocket expense for Mr. Thompson will be $3,000. Question 20. Which of the following is typically excluded from a standard homeowner's insurance policy? A. Damage from fire. B. Theft of personal property. C. Damage caused by earthquakes. D. Injury to visitors on the property. Answer: C. Damage caused by earthquakes. Explanation: Standard homeowners insurance policies typically exclude coverage for earthquakes and require the purchase of a separate earthquake policy or endorsement to cover such events. Other risks, such as fire, theft, and injuries, are usually covered under a standard policy. Question 21, scenario-based. A commercial property insurance policy covers damages caused by fire, theft, and certain types of water damage. A business owner experiences a flooding event due to a nearby river overflowing, causing significant damage. How will the insurance company respond to the claim? A. The insurer will cover the full damage, as water damage is generally covered. B. The insurer will deny the claim, as flooding is typically excluded from standard commercial property policies. C. The insurer will provide partial coverage depending on the cause of the flooding. D. The insurer will only cover damages caused by theft. Answer: B. The insurer will deny the claim, as flooding is typically excluded from standard commercial property policies. Explanation: Flooding caused by natural disasters like river overflow is generally excluded from standard commercial property policies. To cover flooding, the business owner would need separate flood insurance. Question 22. Which of the following is the primary purpose of underwriting in the insurance process? A. To determine the premium amounts based on risk assessment. B. To create insurance policies for a specific group of clients. C. To investigate fraudulent claims after an accident. D. To distribute policy documents to clients. Answer: A. To determine the premium amounts based on risk assessment. Explanation: Underwriting is the process by which an insurer evaluates the risk of insuring a person or property. It helps determine the appropriate premium that should be charged to reflect that risk. Question 23. What is the role of the insuring agreement in an insurance policy? A. Outlines the exclusions and limitations of the policy. B. It specifies the coverage provided by the policy and the insurer's obligations. C. It defines the underwriting process for the insured. D. It details the payment schedule for premiums. Answer: B. It specifies the coverage provided by the policy and the insurer's obligations. Explanation: The insuring agreement is a core section of an insurance policy that details what the policy will cover, as well as the insurer's promise to pay for specific losses or damages under certain conditions. Question 24. Which of the following is typically covered by a standard homeowner's insurance policy? A. Earthquake damage. B. Flood damage. C. Theft of personal property. D. Damage caused by termites. Answer: C. Theft of personal property. Explanation: A standard homeowner's policy generally covers theft of personal property, but it excludes damage caused by natural disasters like earthquakes and floods, as well as damage caused by pests like termites. Separate coverage may be available for these risks. Question 25, scenario-based. A driver with auto insurance that includes collision coverage hits a tree and causes $5,000 worth of damage to their car. They have a $1,000 deductible. How much will the insurance company pay? A. $5,000. B. $4,000. C. $1,000. D. $6,000. Answer: B. $4,000. Explanation: The policyholder will pay the $1,000 deductible and the insurance company will pay the remaining $4,000. Therefore, the total payout from the insurer will be $4,000. Question 26. Which of the following best describes the purpose of an endorsement in an insurance policy? A. An endorsement changes the policy coverage by adding or modifying the terms. B. An endorsement acts as a separate independent insurance contract. C. An endorsement reduces the policyholder's premium cost. D. An endorsement adds a waiting period for claims. Answer A. An endorsement changes the policy coverage by adding or modifying the terms. Explanation: an endorsement is a document that modifies the terms of an existing insurance policy, either by adding new coverage or altering the existing terms. It allows for more tailored coverage to meet specific needs. Question 27. What is a liability insurance designed to cover? A. Damage to property owned by the insured. B. Costs associated with defending against lawsuits and claims for damages. C. The cost of repairs to the insured's vehicle. D. Medical expenses for injuries sustained by the insured. Answer: B. Costs associated with defending against lawsuits and claims for damages. Explanation: liability insurance covers the insured against claims of negligence that result in injury or damage to third parties. This includes legal defense costs and any damages awarded in lawsuits up to the policy's limit. Question 28. Scenario-based. A business purchases a commercial property insurance policy with a $1,000 deductible for fire damage. If a fire causes $15,000 in damage, how much will the insurance company pay? A. $15,000. B. $16,000. C. $14,000. D. $1,000. Answer: C. $14,000. Explanation: the insurance company will pay the amount of the damage minus the deductible. In this case, the fire damage totals $15,000, but the deductible is $1,000, so the insurer will pay $14,000. Question 29. Which of the following is not typically included in a standard auto insurance policy? A. Liability coverage. B. Collision coverage. C. Comprehensive coverage. D. Earthquake coverage. Correct answer: D. Earthquake coverage. Explanation: earthquake coverage is generally not included in a standard auto insurance policy. It is typically offered as a separate endorsement or policy. Question 30. Scenario-based. If a homeowner's insurance policy includes personal liability coverage, which of the following events would likely be covered? A. The homeowner accidentally injures a visitor in their home. B. The homeowner's roof is damaged by a hailstorm. C. The homeowner's car is damaged in a collision. D. The homeowner's personal property is stolen during a burglary. Answer A. The homeowner accidentally injures a visitor in their home. Explanation: personal liability coverage under a homeowner's policy typically covers injuries caused by the policyholder's negligence, such as accidentally injuring a visitor on their property. It would not cover damages to property or injuries caused by natural disasters.